All right. Good evening, guys. How are you doing? I hope you're all doing well and fine. Basically, you're all come back to tonight's class, Sunday, 11th of May, 2025. It's nice having you guys here. I stream in my humble self, Mavic, yeah, basically known as Oluwasei from Oluwa. Do you get that? So now we're getting started with the class, and let's all let's all pay rapt attention. Yeah, we are still basically on. I'm coming. Okay, we are we started this series for a while now, and I guess every one of us by now we should probably have access to the what's it called right now to the PDF files because I've sent them to the channel already, to the group already. So now we've said one or two things about the welcome and overview, which is actually the brief introduction to the facilitator, myself being Oluwase Ifumi Mavic, right? Objectives of this session, whereby at the end of each and every session, at the end of this program, we're expecting each and every one of us to at least be profitable. Not even to some extent, be 100% profitable. But there's nothing like 100% profitability. But consistently profitable is the right word to use at that. So what attendees should expect is you guys will definitely be having access to the recording of each class on YouTube channel. On our YouTube channel, do all to follow Enoch Sub, right? The right way. Make sure you follow them on all social media. And if you want to get link up with me directly, always enter my DM. Fine, I might not really be available mostly because people might definitely be more affected with that. Yeah, because the nature of my work, I'm always kind of occupied. So I rarely have time to come on social media that much. Yeah. So basically, what is forex itself? I explain what the definition, which is actually a global decentralized market that gives access to myself and you guys, including the big banks, the hedge funds, and the likes, the access to the market itself, whereby we all profit. So, and I said something. If each and every one of us starts getting $1 million from the market on a daily basis, it has not yet have any negative impact on the FX market because we have a daily liquidity, like a daily liquid volume of around 3 point something trillion in dollars, so which means you enter the market, your profit doesn't affect mine doesn't affect you, the losses and everything doesn't really affect each other, right? Rather, we get access to the global market itself anywhere and from any part of the world. Do you get that? So key facts and figures, daily turnover, the global rate, I've explained more about that. Now, why do we trade Forex, right? Now, I said something about being a very high liquid market and market that is open 247. That is, no matter the time, no matter the time zone, no matter what, no matter wherever you are in all through the world, right? Mondays to Fridays, you have access to the market. In as much as you have your internet connection and as low as your mobile phone, right? You are definitely enjoying this class right now because you have access to a mobile phone and a very good internet connection. So that means if you can have access to such, then that means you should probably have access to the forex market itself. Please mute yourself if you know you are somewhere very lousy, please. All right, so now leverage and low capital requirement. Please mute yourself, guys, please. All right, thank you so much. So, as I was saying, right? I'm coming. All right. So now back to this. I was actually saying no matter your location, no matter wherever you are, you are liable to have access to the forex market, and it's actually a market that opens 24/7, right? So next is the leverage and low capital requirement because you don't really need to have much capital to start trading itself. You can start with as low as $10, $5, depending on your capability, but just know at the back of your mind that you can't buy Lambo with such capital, but you can have access to the market with such capital, sustain yourself basically as a student and to get a very consistent income, right? So now the next on the list is accessibility and flexibility. What does that mean? You have access to it anywhere, you have access to it any time of the day, right? And the flexibility is you can easily be on a trade and you get on with your normal day-to-day activity without being affected, without any restrictions and everything. Now, the opportunities for profit in both rising and falling market. Unlike the crypto market, right? The forex market gives you access to profit, either the market is rising or falling. That's when you hear traders saying, oh, I'm going long on a particular asset, I'm going short on a particular asset, be it a currency pair, be it indices, be it what's it called, any pair, right? Exotic, minor, and major, depending. So next on my list right now is I have how the forex market really works itself. Right now, understanding the key concept of the forex market, there's no way you won't get to know what a currency pair is. Now, what do you understand by the word currency pair? Currency pair itself is actually what we deal with when it comes to trading. What are we trading? What are we getting ourselves involved in? Do you get that? I hope I'm with some people, Sha. I hope we are together.
Yes, sir.
Yes, we are.
All right.
Yes, sir.
Do you have any question before I continue?
No, sir. No, sir.
Yes, sir.
It's just a matter of me going back a little bit, just for you guys to properly understand. We are not rushing anything. The difference between what we do at Enoch Up here and a normal classroom is the fact that we can always try as much as possible, right? Do you get that? We can always try as much as possible to go back over and over again until you guys have the real access and what you truly want and what is truly needed of you. So now back to what I was actually saying on here. Currency pair, right? What is actually currency pair? Currency pair is actually the value which we deal with when it comes to the FX market itself. And when we're talking about currency pair, we have the base, they are categorized into two different parts, right? We have the base currency and we have the quote currency pair. The base currency, based on a normal layman understanding, is actually number one, the one that comes first, while the quote currency is actually the one that comes second, the second one, because of course we have the likes of Euro USD, we have the likes of GBP USD, right? So the base currency in that aspect is actually Euro USD, while the quote currency is actually what? The the base currency is actually the what? Euro, while the base currency is actually the USD. Do you understand that? On a normal layman way, but it is not always like that. Do you get that? That's why I said the most traded, you know, sorry, just have this belief and understanding that the base currency comes first, and in normal human language will tell you it comes first, right? But the real context is the strongest of the two pair is actually the base, not the most traded, sorry. The strongest of them all, that is the base currency between euro and USD. As at that current point, which one is stronger? Is it the USD or the euro? Then obviously we should probably be considering the USD as the one being what? Being the base, because it might be the strongest as at that point in time. So that's why I would definitely debunk the fact that at times the strongest might not be the one coming first. Do you get that? Hello?
Yes,
Yes,
All
sir.
right. So the quote currency actually is the one that comes second, the next one. While in normal layman language, we understand the fact that it is actually the least strongest, that is the weakest among the two pairs, right? So now, when we're not talking about currency pairs, now you can now further categorize it into another major point, right? Which them being the major pairs, the minor pairs, and the exotic pairs, right? Now, what do you understand by that? The major pairs are actually the most traded pairs on a daily basis. That is, no matter how good your strategy, no matter what you are dealing with and the likes, right? You would have come across a major pair before. That's certain. As a trader, unless if you are not a trader. But the moment you call yourself a trader, right? Even start trading, maybe you are trading, you are still trading them yourself. You definitely you will have come across that before. The major pairs, right? The most traded, right? And what can we say about the major pairs? The most traded in such a way that no matter whatsoever you are trading, you will have come across them one way or the other. The likes of what? GBP USD, Euro USD, GBP GBP card, right? The likes of AUD USD and the likes. Now, the minor pairs, they are the least traded. That is, you might not necessarily, there are some pairs that I personally have not even heard before in my life. Do you understand that? I'll be like, wow, so this pair exists. Wow, that's very nice. So minor pairs will be in the likes of AUD right? You can be any AUD, anything, CHF, card, all those kind of thing. Card CHF. Do you get that? They are the least traded, right? Now, what are the exotic? The exotic pairs are they are not that common, but they are very big and large when it comes to volatility and movement. Do you get that? Those are the exotic pairs. And exotic pairs, they are what we refer to as USD ZAR, right? You can categorize. Fine, gold is actually not a pair, it's a commodity. But to some extent, you can say NAS 100, all these exotic pairs, US 30, you can add gold, but not, I'm not fully in support of adding gold. But to some extent, being the fact that we are just for learning purpose, we can check it out as well. And if we have a different perspective about it, no problem. I personally am not really in support of adding gold as an exotic pair because it's actually a commodity. But all things being equal, no problem. I'm still, we are still on the right track, right? We are still on the right
Yeah.
track. Trust me on that. All right. So next on the list right now is the concept of bid, ask, and the spread, right? So I explained basically the bid and ask prices being, as you know, for you guys to understand. I explained it being okay. I'm coming. All right. Okay. So the bid and ask price, I was using an example of you trying to get a phone, right? So there will definitely be a pricing which the phone will be given out, right? Why there will definitely be a price you have in mind that you might want to bid for the phone yourself. So in the long run, you guys will agree at a particular price whereby you just get it. You get a phone like that. So spread is actually the difference between the bid and the ask prices. That's when if you open your MetaTrader 5, you definitely be seeing some two different lines, right? Depending on the color in which you use for yours. Do you get that? But if you open, do you get that? So you being that okay, fine, there is actually a seller willing to sell a phone to you for you, right? At a particular price, right? That is actually the bid price from the seller. That is the bid. This is the price I am interested in giving out this phone. But you now be like, okay, bro, this is the amount I can definitely afford for this phone. That is now the asked price. So now you saying spread, it will now give you an intuition that the difference between the bid and the ask price is what results to spread. So spread is now what will give you, make you now have access to the right broker. So for you to know a very good broker, such a broker must have, you must provide a very, if not very, but to some extent, some reasonable amount of spread. That some brokers will be seeing spread of 40, 50, 15, 20. That's way too much. Those are not a very good broker. Do you get that? Because spread will not give you an accurate. entry points. Just keep that at the back of your mind. So now, I'm now saying the next on the line is we getting to understand pips itself. Do you get that? Are we there?
Yes.
Now,
Yes, sir.
what do we understand by the word pips? Pips is actually the lowest, the smallest unit, right, of measurement for currency price, for the price of a currency or movement and the likes. Do you get that? So now talking about pips, I will tell you, if I tell you, oh, for example, GBP USD has moved 20 pips, right? What does that mean? It means that from my entry points to the current market price, the distance between the two is actually 20. So now the measurement for now measuring that 20 in forex market is what? Is called pips. For example, when we are talking about chemistry, if I'm telling you, okay, fine, there's a particular ml of water inside this beaker, right? What that actually implies is that I cannot tell you I have 20 water inside this beaker. Is not making sense, right? Do you get that? Instead, it will be more reasonable if I say, oh, Deborah, what's up? This is a cup and it contains 50 ml of water. What does that really mean? It implies that, Debbie, what I'm giving to you is not just ordinary cup. It contains certain percentage, certain amounts of water. Do you get that? So instead of me telling you the market has moved 20 from this point to this point, okay, 20 watts. Is it 20 meter or is it 20 length? Is it 20 seconds? No. So instead, it will be more reasonable and relatable for me to tell you guys that, oh, the market has moved 20 pips from this particular point to this particular point. I don't know if you guys are getting me.
I'm getting it.
All right.
Yes, sir. I get you.
Look here, this is actually a market movement. All these trades are what I picked last week. Can you guys see my screen?
Yes.
You can see a candlestick,
Yes,
right?
sir.
You can see candlestick, right? Hello, can you guys see candlestick
Yes,
over
sir.
here?
Yes, sir. Yes, sir.
All right.
I see.
What this means is, if I tell you, okay, the market has moved from this point where I have my lowest line here to this point where I have my highest line. I can't, okay, let me measure. You see this ruler at the left hand side of the market. Just click on it. Now measure it from the lowest point to the highest point. There is no physics student that won't understand what I've just done, because it's just like you measuring a distance between a point A to the nearest point B. And what is the unit of measurement in the forex market? Pips. We don't measure in centimeter, we don't measure in seconds, we don't measure in meters, we don't measure in in any sort of unit that we have that you might think of. Instead, rather we measure using pips. So now look at the value I have up here. Between this lowest low and this highest high, the market has moved 359.4 points. So instead of me saying the market has moved 359, right? Now, if I want to use points, I will never tell you 359 points. No. Rather, I will tell you the market have moved 3,594 points, which is now equivalent to 359 pips. Simple as ABC. Hey, do we get that? Hello?
No.
Okay, let me come back. I believe every one of us here, we understand mathematics to some extent. Let me use mathematics to explain. Let me use mathematics to explain. Now, when we are talking about points and pips, have at the back of your mind, don't worry, me sef I'm jotting because I need to explain and make you guys understand. Now, at the back of your mind, have it at the back of your mind that for every measurement, there is always a unit. Yes or no? Hello, guys.
Yes.
Yes,
All
sir.
right. For every
Yes,
measure,
sir.
for every
Yes,
measurement,
sir.
yes, there is always a unit. And in the forex market, the unit in which we use to measure distance from point A to point B is called pips, right? So it will only be reasonable if I tell you, guys, the market has just moved from point A to point B 50. Is not making sense. But it will now be reasonable and sense making if I can tell you the market has moved 50 pips from point A to point B. Okay, note this as a beginner. Of course, just know you don't know anything about pips, right? I just tell you, oh guys, the market has just moved 50 from point A to point B. You now ask me, sorry, 50 what? Is it 50 seconds? Is it 50 minutes? Is it 50 meters? Is it 50 mils? I will not tell you, oh no, this is not physics. This is the financial market. And the unit in which we use in measuring distance in the FX market itself is called what? Pips. Now, look here. To measure your pips, your distance, right, in points divided by 10 will give you the number of pips. Do you understand me?
No, sir.
Hey, pips is equals distance in points. Don't worry, I will increase the thickness. 3, I have to increase the thickness, right? Divided by 10. Just know that. Take note of that. You know why I said you guys should take note of that? Because this is just a simple analogy, right, for understanding what pips is. Because market moves in points. Trust me, know that and know peace. Market moves in points. So now, let's now calculate the distance between this lowest low, between this low and this high, right? You pick your ruler here. It's actually a tool on TradingView. You right click, no sorry, you left click. You move the ruler from the point in which you are willing to measure to the point in which you want to measure it to. Now look at the first figure here. The very first figure is 2335, right? Now divide it by 10. That will now give you what? 233.5 pips. Please, You can easily do the calculation. Am I still on the right path? Hello? Am I on the right path before I proceed into something
So I
else?
have a question,
Yes,
sir.
sir.
All right, what's the question?
Sir, this the 2,335,
Yeah,
the one at the back has the dots
yeah,
before the five, and the one at the front has the dots after the two.
yeah. Let me
So
explain to you.
you said we will divide.
Let me
Okay.
explain to you. Now, you see the one having dots after the two is actually okay. If you've worked, you can ask all these foreigners. If they want to tell you 2,000, if they want to spell 2,335, we Nigerians, we spell like this. Look at my screen. 2,335, right? But instead, foreigners will tell you that it is 2,335. Can you see these two things? They mean the same thing oh, but depending on the context. I've worked with someone and I gave a particular figure and he was actually telling me, sorry, there's something wrong. And I spent over 5 hours on staring at this thing that where is the fault coming from? Eventually, it just came and was like, you are using comma to denote figure instead of dots. So it does not really mean anything. Do you get that? But just that this was actually, I think this was configured based on a particular region's annotations and everything. Do you understand that?
Yes, sir.
Yeah, that's just it. So when it comes to 100,
Okay.
they make use of dots instead of comma. Do you get? So I think I still have to study what is behind we Nigerians making use of comma for separating figures and everything. I think I want to. Yeah. Because since I've tried some things, I've checked virtually some things and they were actually using dots to denote figures. I'm not so sure, but that was what I think. Yeah, let me use that word. So, do you have any other question before we proceed? Don't worry, I won't be taking too much of you guys'
Yes,
time.
sir.
Okay, what's the question?
Okay, sir. It's the first one that will divide by 10, right? Not the one at the back.
No, 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 the very first one. If you are using trading view, you
Okay.
are not even supposed to divide.
Mm.
But I just know some people will tell me, oh, Mavic, there is actually a figure in front and there is a figure at the back. Normally, this is what we need. But I just want to tell you guys how we arrived at this with this. This is actually the point. This is actually what. Now, the next one is the market is telling you how long it took the market to move from this point to this point. So it took the market 1 day, 12 hours. That's like 24 plus 12, 24 hours plus 12. Do you get that?
36.
Any other question? I won't take too much of your time. I know you guys are going to class tomorrow.
Sir.
Yeah?
I'm so sorry. Oh. You were saying it that we should not actually use 10 to divide it again. So I'm confused though.
No. I said for you to arrive at the latter figure, you divide the previous figure by 10 to arrive at this. So instead, you don't need to undergo this stress of dividing. Just look at the latter figure, that is the figure at your right hand side. Yeah?
Are you there?
Yeah, I'm here. Question. Someone is still asking me a question. Why I post? Yeah.
Okay. Yes, sir.
Okay. What's the question?
Okay. So I get what you're trying to say now, sir. So what you're saying is that the later one is the one we are going to use to calculate the pips, right?
Not to calculate. That is the actual figure for the pips. But if you are now asking me that, oh, we have more than one
Oh,
figure
okay.
here, that's why I said I was telling you how to arrive at this figure. How they arrived at this was dividing this by
Okay.
10. Do you get that?
Okay. Okay.
Yeah.
I understand now. Thank you, sir.
Yeah, you're
Okay, sir.
welcome.
My last question. I'm so sorry.
Okay.
So, sir, how will we include this ruler in our trading view?
Okay. This every trading view, be it a mobile phone, be it your system, you will have this kind of interface. Set it very well. This kind of interface. Just come to the left hand side here, click on measure, something that looks like ruler like this. Just click on it and put it to that point where you want to measure. Left click and drag it to that point you want to measure to, and left click again. That's all. Do you get that?
Okay, thank you, sir.
You're welcome,
Yes,
ma.
sir.
Do you have any other question? I'm not taking you guys time too much actually. And I think probably this week you guys should be expecting a recorded video from me. Yeah, though the week is going to be a very busy one for me, but I will try as much as possible to make sure I deliver a particular video for you guys.
Sir, please,
Okay,
can you please explain the meaning of that 14 bars? The bars in front of it.
it's just the number of candlesticks that was formed.
Okay.
Okay, let's count it all together.
Alright.
Starting from here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Can you see? Can you see? They just simplified it for you instead of you starting to count. Now I measured from this low, right, to this high. It says 13 bar. Let's now count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Can you see? This one is actually not part. This is the bar. This one is already part of the next bar. Do you get? That's just it.
Yes, sir.
All right. Any other question? If we check now, this is 25 bar. If we count from here to here, we should have 25. Let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. No, I jumped something. Let me see where I was actually counting from. 1, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 13, 14, 15, 16, 17, 18, 19, 20, 21. I should possibly jump something. I think from here. Okay, I started from here. Sorry. Do you get that? So where you started measuring from, do you get? That is where you start counting. This is it. You don't have to extend it. Yes, this is it. Yes. Can you see that I extended it? That was why it was not giving me number of accuracy, because it's it was assuming there should be possibly be some candlestick that are formed, but the market has not opened yet, right? So now start from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Can you see 20 bars? Do you get that? But you don't have to worry yourself about that. You really don't need it, but it's just necessary for you to understand it. That's just it. Any other question?
No, sir.
All right. Should we still continue a little bit?
Yes, sir.
Shengbo. People will come get class tomorrow, uncle.
I said you the class.
Shengbo. All right. So I think we actually understand what pips really means right now. So now, lot size itself. Lot size is actually what you can use to measure how much you make or how much you are risking on a particular trade. I don't know if you are getting me. So you need to possibly understand lot size very well if you truly want to succeed in the forex market. Do you guys get that? Let me check. Are you guys getting me? So
Yes.
yeah, so the difference between someone using 1.0 lot size and someone using 0.01 lot size is the person using 1.0 lot size might probably be profiting, let's say, $300, and you with 0.01 lot size might still possibly be on $3 profit, while someone that use 0.1 lot size might be on $30 profit. Can you see the difference? Just picture it that way and understand it with that simple analogy that I've used. Do you get that? Wow, this is a lot, bro. So the key participants in the forex market, so we have the central banks and the government, the financial market, the institutional investors and hedge funds, the retail traders. Myself, you guys, all the traders you might have access to, they are retail. We are all retail traders because that is what we do. We profit, and the best way to now make money is we now trading in direction of what? Of where? Of the institutional traders, of the big banks and the likes. That's just it. You get that? So now, next on the list, market sessions and timing. Four major sections, we have the Sydney, the Tokyo, the London, the New York and the likes. I said the best time to trade is when we have the overlapping of two sessions, right? Session overlaps and volatility, that is the best time to trade, right? So let's move straight to these types of forex orders. We have the market orders, the limit order, the stop orders, the buy stop, sell stop, take profit and stop loss. Now, what does that really mean? The market order means you are clicking the buy or sell button instantly. That is, the market has gotten to your point of interest, it has given you the reaction you wanted, and you just reacted to what the market is giving to you immediately. That's just it. So for example, on GBP I want to click on instant market execution on GBP/USD. That means the market is currently at a price whereby I think it's want to buy or sell. If it's a buy, I click on the buy order. If it's a sell, I click on the sell order. Simple as ABC. Limit order, what it actually means is, limit order is we are setting it, expecting market to reach a particular point and changes its direction immediately. For example, if I want to set a buy limit, it means currently the market is selling, but I'm expecting the market to change direction and follow the real market order flow. Then I will now wait and set limit order to a particular price that I'm not expecting the market to move beyond without reversing into a buy or a sell. Are you guys with me?
Sir, please come again.
All right.
Yes, sir.
The instant market execution is
Yes, sir.
actually, yeah, please mute yourself back. The instant market execution, market order means you are clicking the buy or sell button. Immediately you feel the market is currently at your point of interest and you are ready to go either long or short. That is, you either want to buy or you either want to sell. Simple. Limit order, you are expecting market to trade to a particular market price and change its direction. For example, buy limit, it means that for you to set a buy limit, it means that your market is currently selling, right? But the real overall market direction is buy, is a bullish market, right? So the market is selling based on retracement. So you now set a market order, a buy limit order below the current market price, that whenever the market reaches this point, I'm not expecting this market to go lower to sell again. I'm expecting it to go higher. That is to start buying from this point. That is when you set a limit order. Now, stop order. Okay, sell limit order. Let me go on the charts and explain better. If at all we are calling it a day from here, at least we gain something. Let me share this. All right. This is market itself. Look at this. Look at this, guys. Look at this, guys. The market is currently here. So I will now click make use of market order if I feel this current point market is ready to buy or sell. If it is a sell, I click on sell immediately, and if market sells sold eventually, I make money, and if it's continues buying, I start losing money. That's where my stop loss comes in. But now a limit order means the market is currently here. So probably this line, I'm expecting my market to trade to this line and I'm not expecting it to go lower. So what I will now do is I will now put my market order somewhere around here, a buy limit. So what you are telling your broker is the moment this market sold off to this point, then I should enter for a buy, right, to this point. My stop loss must be below this low. For a buy order, I said something, your stop loss must be below your entry point, while your take profit must be above your entry point. But for a sell order, right, your stop loss must be above your entry point, while your take profit must be below your entry point. Simple as ABC. Do we understand?
No, sir.
Hey, God.
Sir, can you say that again, please?
Okay. Your limit order, know that limit order is what you set in advance. Your market is not there yet, but you are so sure based on what do we call it, based on your analysis that the market should trade to that point. Do you get that? Now, some things must be put in place before you move forward, before you set a limit order. Number one, the overall market direction must be telling you the kind of limit you want to put. For example, if you want to set a buy limit order, that means your overall market direction must be a bullish market, number one. Number two is that the market will start telling you currently that it is selling based on retracement. So you will now set your limit order, buy limit order below the current market price. Once the market trades to that price, right, the market will kick you in for a buy, while your stop loss will now be below your entry point, while the take profit will be above your entry point for a buy. Because for a buy, you are targeting higher prices to make money. For a sell, you are targeting lower prices to make money. Instead, your stop loss will be above your entry point for a sell, while your take profit will be below your entry point for a sell. Simple as ABC. Do you get that? Hello? Do you get that?
Sorry, so I'm kind of
Yes, sir.
confused.
Someone saying something?
Yeah, I'm kind of confused.
How? Where?
Okay, so you said that what's it called? That you're buying when you want to buy, yeah, is your stop limit should be lesser because you are targeting higher price. Is that correct?
Yeah?
And then when you want, is the selling part that I don't understand because if you are buying, I'm sorry, but then if you are buying, yeah, then you should want to buy at cheaper prices. Is that not how it is?
Yeah.
Exactly. So if your what's it called? If how is it now possible that when you are buying and the prices is increasing here, that is when you now put your profit at what did you say again?
Yeah. Because you buy at lower price. You are now
Uh-huh.
expecting market to reach a particular higher price for you to make money.
Okay.
If you buy,
Exactly.
for example, if you buy at 5 naira and the market moves to 4 naira, that's a loss.
Yes.
So that means your market must move from 5 naira to at least 6 naira before you make money.
Mm-hmm.
So use that to explain this. You are buying at a particular price, 5 naira. So your take profit must be at least 10 naira for you to make money. While your stop loss
Okay.
must be, let's say, 3 naira. You don't want to lose more than that. Simple as it is.
Okay. Now for the selling, yeah, said you say when your prices are what's it called? When the price is increasing, right?
No, you sell at the higher price to target a lower price so that you can buy again. The market is a cycle. You buy to
Okay.
sell, you sell to buy.
Mm-hmm. I'm sorry, sir, but then the way you explained this buy this thing now, this buying
Yeah.
this market where you buy, yeah, can you please explain the selling market in the same way? The way you gave the an example of okay, if you enter the market with 5 naira and then you
No,
want to make
yeah,
money when your money
I got you, I
yes.
get you, I get you. Now, you want to sell your TV at a particular price. Oh, you bought your TV, let's say 5 naira, right? You bought the TV 5 naira. You make money when you are able to sell the TV around 10 naira, right?
Yes.
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 Now you want to buy another one. There's high chances that if you buy at 10 naira and the market drops, you might be at loss. Yes or no?
Yes. Yes.
So instead, you now sell what you have at the price of 10 naira. That is the entry price here. You are
Okay.
now looking to buy again. You now sell to a point whereby, oh, you sold and the market is now currently at 4 naira back. You now buy again at 4 naira, and your target will now be at 10 naira again to make money. So you only make money when you are selling at 10 naira and the market keeps dropping and refuses to go back up. That's simple as that.
Oh,
Do you have any other
okay.
question?
No, sir, I understand now. Thank
All
you.
right, you are welcome there. Do you have any other question?
Yes,
No.
sir.
Okay, I'm all
Yes,
yes.
sir. Sir, I just need an explanation on something, but it's not on what you wrote, sir. Can I
Okay.
ask, sir?
Yeah, ask your question.
Okay, sir. Sir, what's the meaning of break even in the market?
All right, break even means the market has moved a little bit in your favor. Oh, you bought a TV at 5 naira. Currently, the TV is currently at 8 naira. But there's high chances that if care is not taken, the market price for this TV might drop more than the 5 naira you bought it. But there's high chances again that the market might reach 20 naira, right? Instead, you will now try look for a way to stabilize yourself that even if this market drops, you are not dropping below 5 naira that you bought it. Do you get that? It means that if at all you are not giving me money, right, you won't take what I brought to the market. So instead, oh boy, you are not giving me money oh, but trust me, what I brought to the market, at least I must take it back with me. Do you get that?
Okay, I get now.
That's
Yes, sir.
just it. So break even means something that simple. You don't want to lose from the markets. Instead, you place your stop loss above your entry point. That is, if at all, no matter how well the market has dropped, your broker will never, you will never close in loss because your stop loss is already at the price in which you bought or you sell or you sold from. Do you get that?
I get it.
Yeah.
Thank
Do you have any other question? Do you have any other question?
No, sir.
All right, let's digest that. So, in the meantime, I wish you guys a happy trading week and a successful one at that. In case you have any question, do well to enter my DM or enter Deborah's DM, right? Yeah, the class coordinator and everything. She will definitely look for a way to get through to me. Do you understand that? So, in the meantime, thanks for having me.
okay, sir.
Have a wonderful night rest. Bye. Good night.